This time the currency markets, you had a little bit of a shock movement on the rupee this morning after it opened following a break of a day. The rupee trading at about 64.74 to the US dollar. Let's get a view on what's moving the currency. K Harihar, Head Treasurer at FirstRand Bank, is joining us on the phone line. Good morning, Mr. Harihar. Thanks so much for taking our call. What's the rupee reacting to this afternoon?
See, overall, I think today there's been a decent amount of importer covering that's been happening. So while one can, at the headline level, say that the FIs have been very quiet this month compared to the last month when we had 20-odd thousand crores of net inflow coming in. This month they've been net negative. Now that's a fact, but it's also a fact that the fundamentals are still perfectly okay. But two things have gone against probably the rupee. One is a lingering impact of the current account the trade deficit number that got printed at $16 billion, showing exports growing very slow, and imports piling up quite a bit. So that was something that was the first trigger when you saw the importers looking to cover out their short-term exposures. And I think that's picked up momentum quite a bit. There is also a bit of speculation in the market, but completely unproven that with the little scam that's been talked about in the media, would bias credit, which normally happen on a continuous basis, are some of them not getting rolled over and are some of them getting paid out. So when they get paid out, obviously there'll be some demand for the spot dollars. Now this is speculation, it can't be proven, but so I think it's a mix of both. The trade deficit making importers nervous despite the fact that the dollar index is not looking strong. So that's one thing that's making people wary. The second factor is the FIs. And the third one, which could be partly true, which is some of the import credits that have been taken are not getting rolled over and are getting paid on maturity.
Mr. Harihar, I was just going to ask you a follow-up question on that, because that was exactly what we were wondering. It's very tough to pin down data on what kind of sort of bias credit has been taken or gets rolled over on a monthly basis. We haven't been able to find any such data. But do you have any indicator of the numbers? And even if not, do you sense that that can potentially be a factor that will continue to move the rupee till this sort of dies down a little bit?
Yeah, even, as you said, precise data is not available, but periodically when you do get data from regulatory sources, you do see a number of something like, depending on the month, something like $70 to $80 billion of what is called short-term credits. Now, short-term credits is everything which is short-term and maturing within the 1 year. And that would primarily be these bias credit and letters of credit, etc., but could be longer-term ECBs having shorter-term maturities also. So it's a decently large number. So answer your second question, yes, to the extent that some of these, bias credit slash letters of undertakings don't get rolled over or get paid out on maturity, there would be the potential for extra demand manifesting in the market as compared to the normal run rate. Because if it had been rolled over, obviously that demand doesn't manifest itself. Or even if it does, it comes in today and gets, as money comes into the nostril, goes out tomorrow. So there could be some pressure building up. But what happens in this market is it's not a standalone situation. So if you're an importer and you see the rupee sliding from 64.25 to 64.75,
right,
you would have some stop loss levels in mind where some importers who have nothing to do with bias credit, but who just have import exposures, may also come in to cover their exposures.
Okay.